Good afternoon, everybody. Today's panel discussion, we're going to be talking about how peer-to-peer and crowdfunding are changing the way SMEs source and raise funds. To start off, I'd like to introduce our panelists. Um, I do apologize for the mispronunciation. So first off, we do have Hagop Taminian, investment principal at Silicon Badia. Silicon Badia is a venture capital based in Amman with two focuses, a MENA-focused fund and a US-focused fund. Next, we have Mohammed Masri, co-founder and director of Iktitabi, which is an equity crowdfunding platform. Previously, we're going to go more into what's the change and the challenges that has gone through your experience. Next, Nikolas Fotilas, founder and CEO of InOrOut, which is a instigated angel network with a unique model, which we'll be going more into. And then Ahmed Moor, founder and CEO of Lua, which is a peer-to-peer investment platform focused on the MENA region. And then Abdullah Al-Absi, CEO and founder of Zoomal, which is a rewards-based crowdfunding platform. So really, before we start, I'd like to highlight a couple of things and just get the terms out there. So the problem that here we're addressing from other external factors is that there's a lack of access to capital. And due to stricter regulations of capital lending, the solutions that we're seeing today that SMEs are eyeing out are peer-to-peer lending and crowdfunding platforms. So really, what is peer-to-peer lending? Peer-to-peer lending is lending money to individuals or businesses through online, where lenders are matched with borrowers. Crowdfunding is raising funds online through a crowd of investors, minimum smaller tickets amounts. We have 4 different types of platforms. We have an equity platform, we have a donation-based, lending, and rewards-based. So I'm going to have the panel start out and really talk about how are these financial technologies filling the gap for banks. So Hagop, if you'd like to start.
Sure. So, I mean, we're a venture capital fund. My main relationship to crowdfunding is that we just led an investment in Lua, which, as Faisal mentioned, is an online marketplace lender. Now, Ahmed will explain a bit more what that means. But very quickly, from our perspective, our view is that lending can be improved by technology. And that happens in multiple ways. Maybe one of the most fundamental ways is, if you think about it, the main source of loans is you think of banking. And the way a bank works, I mean, the source of funding is essentially deposits. And to generate deposits, banks operate massive branch networks. And bank branches are very, very expensive. So what happens is, when you bring this process online, you end up saving on your funding, and those savings can be passed on to your borrowers. One more thing from our side is that, you know, one of the big developmental challenges in the Middle East is SME access to finance. So projects like Lua, which help address this problem, are interesting for us. So that's mainly from our perspective why we invested in the company.
Thank you. Hello. I absolutely agree with everything you just said. The critical gap for our SME and startup ecosystem in the region, not just in Jordan, is proliferated access to finance. It's really difficult for most of these startups. It's actually practically impossible for them to approach a bank at any stage in their early development and say, I'd like a loan. They don't even have the proper structure. They don't have the right materials. They don't even understand their business properly yet. So they need someone who's willing to take sort of a leap of faith, who has maybe a more risk, well, let's say palatable profile. So as far as Lua goes, with peer-to-peer lending, you're leveraging people. With equity crowdfunding, you're leveraging people and beyond. So one of the first people who, for example, when we were founding Iktitabi, we went to was Hagop. We wanted VCs to engage with us. But we also wanted to democratize the entire process. So we wanted, yes, absolutely, as a startup, you'd have access, because of electronic payments, you'd have access to people. So I could invest in your company from as little as $10, for example, and a VC that took that seriously and actually studied and found that this startup fits their risk profile, they'd probably consider a more serious investment. And that just improved everyone's chances of success. Us, though, we have a problem, we have many problems, as far as electronic and mobile payments go. We found our own, well, we found a myriad of challenges, which hopefully you guys will hear about now, and you'll help us fix.
So let me start by explaining what the name means on what we do. So InOrOut is a new concept in the sense that, as both of you guys mentioned, it's a bit hard for startups to get funding. And actually the average funding round for any startup is between 6 months to 12 months. So what we're doing is we're asking our angel investors to park as little as $5,000 in the bank, and we actually give them a check equivalent to that amount so that basically they can withdraw their money whenever they want, so we don't take any fees out of them. What we do is we screen opportunities, a bit like a VC would do, and then when we find an opportunity that we would also invest in, we do all the due diligence, we prepare the term sheet, we prepare an executive summary, we send it to our angel investors, and we ask them, are you in or out in that opportunity? And you have actually only 1 week to respond, so we don't lose time. Once we get the responses, then we create an SPV, which is like a special purpose vehicle, so it's one entity that invests in the startup. What we managed to do is within 1 month, essentially, we managed to do what a startup would take up to a year to do. So this is what we do. Now, the main challenge that we have seen is twofold. On the one hand is the access to capital from the startups, and on the flip side is the access of startups to the people, like, we just said democratization, right? So most people that want to invest, they don't have the time or the know-how. So this is what we're coming in to basically cure and bridge that gap. And mostly through the other questions, I think we will cover a lot of topics.
Thanks. First of all, I'd like to thank Arab Advisors and Ejib for inviting me to speak on this panel. The pleasure really is mine, and thanks to the other panelists and our moderator. So my company, Lua Inc, is a marketplace lender. What that means is basically we've created an online channel for small businesses to apply for loans, and at the same time an online channel for banks and individual, we call them retail lenders, to lend directly to those small businesses. Today we're working with 3 banks in Jordan, Bank Al-Arabi, Bank Al-Ittihad, which is also an equity investor, and Capital Bank. And we're eager to work with all of you as well. And we have over 1,300 registered retail lenders who lend through the US entity. Our portfolio today stands at $1.5 million. We're growing pretty quickly. We've done about 80 small business loans. And I want to disambiguate, I think some of us are talking about different things. For us, the businesses that we're interested in helping to underwrite debt for are the kinds of small businesses that you interact with on a daily basis, your dry cleaner, or we have a client who distributes air conditioners, those kinds of things. The businesses on Shara' Mecca and in the Balad. So the average portfolio company for us has been in business for 5 years or more, and they typically take loans of up to about 40,000 JDs for trade finance. Thanks.
Hello. Thank you, Faisal, for the introduction. So Zoomal basically is a reward-based crowdfunding platform. I'm going to do just a quick intro on. So basically, reward-based crowdfunding means if I'm doing a new kind of pen, for example, that would last for a year, you keep on writing with it and it will last for a year, and I need $20,000 for this. I would go to the crowd and I would tell them, I need $20,000 to manufacture this product in China, and if you support me with $20, whenever I do this pen, I will ship it over to your home. So basically, everyone is kind of supporting this project to make it a reality, and they're getting kind of a stake. It's not really an equity stake, but rather the product itself. So differentiating with other platforms, the real gap that we are really filling out is early stage innovation. So when we look into the crowd lending model of Lua, it's more for known kind of businesses, traditional businesses, I would say, that have very clear kind of returns, and people get the money and then they return it back within a certain period of time. When it comes to Zoomal, it's more for risky businesses. People, not just businesses, but any kind of risky project that they're not really able to guarantee the person who's funding them to return the money, right? And that is kind of the gap where a lot of the creative projects, people who are thinking about really very cool kind of new innovative ideas and breakthrough ideas, they need this small amount of funding to be able just to prototype it, to test it, to do something like that. And they cannot guarantee to return anything to people. So that is the gap that really Zoomal figures out for the banks and for the community. And then after that is equity crowdfunding, where more advanced businesses that have gathered data from the market, that have gathered data and a lot of users, and now they want to grow their business. They have proved something, and now they're easily able to get investors and bring them long-term returns. So this is kind of what the gap we're filling out.